What is a mutual fund? Mudra Pandit has always dreamt of building a house of his own and taking his family to Europe for a holiday. To fulfill these, Mudra has been saving small amounts in saving accounts and fixed deposits. However, his investments are not growing at the rate he would like them to. Mudra is now looking for an avenue to maximize the earnings on his savings. A little bit of research shows Mudra that for investors like him, mutual funds can be an option to explore. Let's understand how a mutual fund works. Suppose Mudra visits a restaurant and feels like having 3 different types of pizzas, but has money for only one. He could invite 2 of his friends to share the meal with him. The 3 of them could then together buy 3 pizzas and share 1 slice each from each of the 3 pizzas. This also means that in case one of the pizzas is not to their liking, they still have the other 2 to ensure an overall enjoyable meal. This is exactly how a mutual fund works. It pulls in money from several investors to invest in a variety of instruments. This tends to lower the risk. When Mudra buys 1 unit of a mutual fund, he actually owns a small part of each of the instruments that his mutual fund has invested in, such as stocks, bonds, and other securities. Mudra has neither the time nor the financial expertise to decide how he should divide his investment between these multiple instruments in order to extract the greatest profits. This is where a professional fund manager in a mutual fund comes in. The manager divides the investments not only between different instruments but also into various sectors within the same instrument. For instance, a mutual fund manager may decide to invest in shares in the cement, telecom, IT and infrastructure sectors. Even if some of these sectors perform poorly, there is a likelihood that the performance of the other sectors will make up for it. Many might think that the cost of having an expert fund manager would be very high. But the best part about mutual funds is that the cost of professional investment management is shared by all the investors, making it low per individual investor. Important points to remember are: mutual funds pool in money from several investors. Mutual funds invest it in a diversified portfolio. Mutual funds are managed by professional fund managers. The cost of professional fund management is shared by all the investors.